Hello and good day once again to traders out there. How you guys doing? I'm sure you guys are having an amazing weekend. Today, again, you're welcome to the BitTech Global YouTube channel. I want to welcome you here. If this is your first time on the channel, just make sure that you do it. You subscribe to the channel because this is where you want to be. I promise you, this is where you want to be because right here on this channel, we're going to be sharing with you amazing content that's actually going to help you develop your new amazing trading lifestyle, trading strategy. Think about it. And this is actually going to be for both for beginners and even people that are already in the game already. All right. So today we are going to be going into something, something amazing that everyone is going to love because this is what everyone actually loves to hear. So if you know that that is the case for you, you really want to see what's going to happen today. So make sure you stick with me to the end of the video. And without wasting further time, let's get started. So today we're going to be talking about indicators, all right? So today we're going to be dealing with indicators, and we're going to be taking just a few indicators which are the major commonly used indicators and how we can actually use them to trade in the market. So basically today what we're just going to be focusing on, like I said earlier, is what? I can hear you. Indicators. All right. So when we're thinking about indicators, basically indicators are just, materials that are actually used in the market to predict the price movement. So for example, if the price is actually going down and then we're creating series of higher highs and higher lows, in case you've not actually watched the video on market structure, make sure you go watch that video because it's really going to help you a lot. If you have an understanding of market structure, it's actually going to give you a very vast knowledge and a hedge in the trading industry, all right? Because this was what we actually discussed in the previous video. So if you've not watched the previous video, what are you waiting for? Go watch it. All right. So basically, we are right here on times when you're having market structure whereby you're having series of higher highs and higher lows, or you're creating series of lower highs and lower lows, like we have right here on the screen. And the indicator is just actually there to just do for what particular purpose. The indicator is just serving as a signal, or should I say it's serving as a guide for you to actually know where the price is going at a particular time or at a particular moment. All right, so we have different kind of indicators that we're going to discuss today. We have the moving average, okay, we have the stochastic oscillator that is actually majorly referred to as a momentum indicator, okay, so we have a lot of it. We have the RSI, all right, we have the RSI, we have the MACD, okay, so we have the MACD also in the market that a lot of people use in taking their trade. And we can actually continue to list a lot of indicators like that we're actually having in the market, because there are a lot of indicators. I tell you, you have to trust me, there are a lot of indicators. If you think you actually want to know how to use every indicator, well, be my guest, because it's not actually possible. Your chart is just going to be so bombarded that you will be so freaked out and you won't actually know what to do. But today, I'm actually going to be sharing with you indicators that can actually help you execute better trades in the market. So let's dive right in. So today we're going to be looking at, I'm going to share with you just two indicators that you can actually use to get much better trades in the market. Okay, so and the first one that we're going to be considering is what? Moving average. I know a lot of people do actually have some bias about moving average. Okay, it's slow, it's this, it's that. It's because you are not actually using it in the right way. So in this video, I'm actually going to teach you how to use it in the right way. That is why you have to stick along with me till the end of the video, all right? And I will also show you how you can actually use this to generate signals for yourself. And you don't even have to rely on people's signal. You don't need to rely on any of the things. You can actually generate signal for yourself. Okay, so if you come on TradingView, you will see this top right, the corner where we're having the indicators. If you click on it, and you can just search for moving average, okay, moving average, you can see it's actually pop out a lot of things. Okay, so we're looking for just a moving average. Let's add our V, and you can see it right here, the moving average. So we're going to have the first one, and secondly, we're going to be coming down to this particular one, which is saying the moving average exponential. Okay, because we are having different type of moving average. And you can see over here we're having another one right here. Sorry, this one right here, which is seeing the smooth. So different type of moving average, but for the purpose of this video, we're actually going to be looking at this two right here. So we're also adding this one right here. Okay, now we're good to go. Let's close these. You can see how they appear here on the screen. So we're going to change the setting a little, and from after changing the setting a little, we're actually going to diversify. Okay, one more indicator that we're actually going to be using for the purpose of this video. All right, so we're also going to be using what? The stochastic oscillator. So if you just press the word stochastic, you can see it right here on the top where it says stochastic. Okay, so we have the stochastic right here. Now, I know majority of people out there actually know what indicator is. That is why I'm actually going into the basics of indicator. But in case you do not actually have this basic general foundation, the knowledge, and you really want it, you're really hungry for it, leave a comment down in the comment section and I will make sure that you get a video on it. You have my word. Alright, moving forward, we're having indicators right now on our chart. But the question is, how do you actually use these indicators to actually produce or get better entries in the market? Now, let's move forward. So first of all, let's come down here and change the settings a little bit. So right now, first of all, the first thing I want you to do is just to change the color, okay, so that you won't actually get confused. We can actually let's use a yellow and a blue. Okay, we're having a yellow for the moving average. We're having a blue for the exponential moving average. Let's also try to tweak the settings a little, which is the length right here. Let's make it, okay, let's go around 15. All right. And let's make this young man maybe 13. Okay. Now, what do we have here? We have a moving average across the board. Okay, so once you're done with that, the next thing you want to do is what? The next thing you want to do is just for you to come here, double click, or you can easily, apart from that, you can also easily come here and just click on the setting button that we're having right here, and this is actually going to pop up. And I want you to change this from 14 to what? 50. Now, I know a lot of people might actually be confused that, oh, why are you changing to 50? This is this, that, and that. The value is too big. Now, I know most times all these indicators, the reason why people kind of like think that indicators doesn't work is because they lag a lot. Okay, so if you actually want to reduce the rate at which the indicators lags, you need to know how to tweak the number. Okay, so it's not going to be giving you a lot of false signal. Okay, now you can actually compare this to when we are actually having this in the market, when we're actually having it to what? 14 in the market. When 4, you can actually compare both. Alright, you can see that we're having lots more of signals that actually false. You can see it right here. I'll actually show you, but okay, let me actually come back to show you that, okay, so that I won't actually, get you confused. Alright, so now we have an indicator right here. Now, this is how you can actually put these two indicators together to get trades in the financial market, okay? This is how you can put these two indicators together to get trades in the financial market. Let me change this. I changed my mind because I think this value is actually going to be much better for everyone to actually use. So I'm actually going to use this. All right. So here we are now. Right now, at the moment, we're having signals being printed for us live and direct on our charts. Okay, so now how can you actually put these indicators together and use them to trade in the financial market? All right, step 1, now you need to know how the stochastic oscillator works. Now, stochastic oscillator just actually works from what? The overbought to the oversold. Okay, we're trading from what? The overbought to where? The oversold. Now, when the market is actually doing what? It's actually overbought. Okay, that means the market is actually, preparing for a sell. Okay, and when the market is actually oversold, meaning the market is actually doing what? Preparing for a buy. So when the moving average that you're seeing right here on the stochastic oscillator, when it's at this area in the market, when you're seeing something like this, this is the overbought and the oversold area. So this area right here is the overbought. All this area right here that you're seeing is oversold. Once it comes below the 20 and once it goes above the 80, we're having both the overbought and what? The oversold. So we have it right here. We have the swans right here, and we can continue to draw these on and on and on and on. All right. So that is not our business for today. Okay, so we just want to see how we can actually use the indicator to trade in the financial market and how we can use it to generate successful trades in the market. All right, and this can actually work across any market. I mean, it could be the crypto market, the cryptocurrency market, it could be the currency market, it could be the stock market, it could be the indices, name it. This actually works across everybody. Now, remember the setting I used 2020, a simple and a moving average. Right here, I use 50. Okay, so now let's go. At this level whereby we actually have the stochastic oscillator, all right, we have the stochastic oscillator around that point whereby it's actually turning back. So what do you want to do? You want to wait to see a confirmation. So we are waiting. At this point in time, we already see that the market is actually overbought. Okay, so whenever you see the market in the overbought area, okay, you're waiting for a sell. You don't just jump into the sell once the market starts coming down into some of this area, because if you look at it, you'll find that we actually had a false signal printed for us right here. Okay, we had a false signal printed for us at this point, and that is where you have to be very, very careful. All right, now once you have this kind of movement in the market, you want to wait for what? For the price action, for the moving average in the stochastic oscillator to come down below where? Below the 80 level. And once it actually comes down below the 80 level, you'll go back here and you want to see what is happening. Now, for example, if you have this kind of market, you don't want to enter a particular trade. Okay, you don't want to take any trade in this kind of market condition. You want to have a market condition that is clean. You want to have a clean chart. You don't want to be trading in a choppy environment. Okay, so basically that is the rule number one. So you want to wait for the market to actually go over both here, and after which you're actually doing what? Waiting for a cross in the market. You can see right here, after we had this consolidation, we had this break to the upside, and then we had a break down. The market was coming down back. We had a cross and we had a momentum in the market. Now, this candlestick is showing signs of strength in the market. This particular candlestick, after it actually crossed, it's showing signs of what? Strength in the market. All right. So by showing signs of strength in the market, you can actually be looking at this area right here. Let me change this to the cross, and you can see it from right here. You'll notice that down here, the moving average already is inside below the 80, and over here, there's a cross taking place already. We have our momentum, and we are having the market moving down. So, for example, if you are now buying Bitcoin as at this point in time, look at you're selling, not buying. You're selling Bitcoin as at this point in time. Look at how you're going to be rich, man. Okay, so and the process actually continues like that, and like that. Okay, so but this doesn't mean that you're actually not going to get some false signals. There are still times where you're going to get false signals, but there are a lot of concepts that you can actually put together and actually get more correct signals. Look at what happened here again. Okay, after we had a cross at the overbought area, we left this choppy area, which is where we are having consolidation. Okay, so after the consolidation, the market actually went up, now came down. We had a cross, and then we had this line coming down here, and after that, you can see that this is also a nice sell. Let's actually look for a signal for a buy. Okay, so let's say I'm looking for a buy in the market, and what am I actually looking to do? Now, at this point in time, the market is just doing what? Just misbehaving is what I'm going to call it. Okay, it's misbehaving. You can see what is happening right here. The market is very choppy. Okay, now after we actually add that choppiness in the market, now we add the market going below, giving us an oversold market, and then crossing, coming back up. We're having the cross, and at this line right here on this particular candlestick, I can actually be looking to take my trade, but I will be very careful. Why? Because I'm actually still inside of this particular range. This is one of the areas where you have to be trading with caution. Now, after the market actually moved, this candlestick that actually this bullish candlestick that printed after each other. In case you've not watched the video on a candlestick, please, the introduction to candlestick, please, you really need it. You're actually gonna need it. If you're new to trading and you don't know what candlestick is all about, you don't know the concept behind the candlestick, please make sure you go back and watch the video. All right. So will see the way this candlestick is printed after each other, and then after that we had a pullback coming down to retest the what? The moving average. Then I can actually be looking for an entry from here. But you need to be careful for one thing, because this already reached the oversold level. Okay, so assuming this right here is still in between this area, you understand? The moving average inside the stochastic oscillator is still inside of the 20 and the 80. I could actually be saying, okay, it's a very good entry, meaning you have to wait for you to get your next signal, and which is happening right here. Now, right here, you actually see that you actually had what? The movement of market from the upside to the downside, and then we had another movement to the upside. And then we had a crossing in the moving average that actually took place on this particular candlestick. And at that same candlestick, this man right here went from oversold towards going into overbought. And then if you get an entry here, you can actually hold this kind of trade till you get to the top. And that is how you can actually use the moving average to trade alongside the stochastic oscillator. So if you know you're actually enjoying this video and you actually want me to make more similar videos like that, you want to see more things like that, make sure that you like the video, okay? Make sure you share with your family and friends, and leave a comment below, because that is very important. And you can also join us on our platform, which is the BizDex. You can actually download it on your phone and start trading, and you are actually going to get the best trading experience ever that you could ever imagine, because this is actually going to blow your mind, because we also give you information, we give you strategy, we give you signals on trades that you can actually take and execute. So it's very important for you. All right, so that's going to be all for today, and until next time, you know what, continue to trust the process. See you.